Thanks for clicking! Canada's fixed mortgage rates are trending downwards as bond yields fall amid speculation that the Federal Reserve is going to be soon cutting interest rates.
Now the time has come to act.
But speaking of the financial savants that represent the real estate industry, the news of lower fixed rates will no doubt be welcome news to Bloomberg, which is already pumping the FOMO. The article, written shortly after the Bank of Canada's rate cut, was well sourced, having spoken to two potential homebuyers and a real estate agent who said things will turn fast and that buyers that didn't get in early will be saying, "I wish I had, I wish I had."
It's all right to tell them that they're being stupid.
And it wasn't just Bloomberg. Royal LePage stepped up in the immediate aftermath of the bank's rate cut, noting that mortgage affordability thresholds are continuing to come down. But is that the case? Are we seeing any major changes in affordability in Canada's real estate market? So what I want to do today is go over my best fixed mortgage rates for the month of July, go over affordability heading into the fall real estate market, take a look at the FOMO being pushed by Bloomberg, and then discuss some implications. It is the end of the month, so we are eagerly awaiting the release of July's real estate data coming out from the local boards any day now, and we'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these mortgage rates. Onto the mortgage rates. Very briefly, this month is a little different, as I usually do like to compare the previous 3 months worth of mortgage rates. But this month's a little different as I didn't really do any updates in May or June, as mortgage rates didn't really change in May. And then in June, things were so volatile that we didn't see any continual trend. And then it wasn't until July, mid-July, that we started to see a sustainable move downward. Or, as the media puts it, rate cuts are going to revitalize the housing market. Regardless, let's get into these mortgage rates, comparing where they are now to where they were in April. First up, my best 5-year fixed insured mortgage rate. An insured mortgage, if you'll remember, that's where you have less than 20% down, have a 25-year amortization, you qualify at 5.25 or the contract rate plus 2%, whichever is higher, and you pay the mortgage insurance. My best 5-year fixed in April was sitting at 4.94, and that's dropped down to 4.69 as of July, with variable sitting at prime minus 1.1 or 5.6%. So Canada's 5-year fixed insured mortgage rate is down by about a quarter point since April of this year, even though the Bank of Canada has now cut interest rates by 50 basis points.
I don't get it.
I know. But despite what the experts continue to tell us, just because the Bank of Canada cuts interest rates does not mean a one-to-one reduction in fixed mortgage rates. And we can see this with insurable rates as well. An insurable mortgage rate, if you'll remember, that's where you have that 20% down. You have a 25-year amortization. You qualify at 5.25 or the contract rate plus 2%, whichever is higher. And of course, you do not pay the mortgage insurance. My best 5-year fixed insurable mortgage rate in April was 5.19 and is now sitting at 4.89, with variable sitting at prime minus 0.6 or 6.1%. So again, insurable rates down 30 basis points when the Bank of Canada has reduced rates by 50. There is not a one-to-one relationship. With that said, we did see a massive reduction in uninsurable mortgage rates. An uninsurable mortgage rate, if you'll remember, that's where you have either a 30-year amortization and or you take money out of your home. You qualify at the greater of 5.25 or the contract rate plus 2%. And of course, you don't pay the mortgage insurance. My best 5-year fixed uninsurable mortgage rate back in April was 5.67, and that is now sitting at 4.94%, with variable sitting at prime minus 0.6 or 6.1%. So, uninsurable rates are actually doing far better than that 50 basis point reduction. With that said, as we saw in the fall, winter, and early spring, uninsurable mortgage rates were artificially high, so there was more room for a discount. So, insured, insurable, and uninsured mortgage rates all down since April, down between 25, 30, and 75 basis points in the case of uninsurable, and most of that due to declining Treasury yields coming out of the United States. But the big question is, what does this do to affordability? Is it any cheaper to buy a home?
Drastically reduced.
Let's plug in Canada's benchmark price in April of $718,300, use minimum down payment requirements in April's 4.94 interest rate, and we get a payment of $4,034 per month. Now, let's plug in June's benchmark price of $717,700, use minimum down payment requirements and today's 4.69%, and we get a payment of $3,932 per month. So, between April and June to get that benchmark price home, we've seen about $100 per month price reduction, or about 1/4%.
It's anarchy, baby!
Is that going to be enough to cause homebuyers to flood back into the market? Well, 3 people interviewed by Bloomberg said so, with one looking at the London and St. Thomas real estate market, saying that a bit of fear of missing out was starting to take hold. With that said, though, it is a bit interesting that Bloomberg chose the London and St. Thomas market, our little towns making the national news, as this is the first time in I can't remember how long when LSTAR has not released June's real estate data. Meaning we can't really double check that FOMO assertion now, can we?
That was not my intention at all.
But out of the data that LSTAR has given us, in May, the months of inventory was 3. And in June, that months of inventory was sitting at 3.4. Meaning, between the 2 months, there was even more inventory available.
Too late. You had your chance.
Further, when I've been speaking to realtors in the London area about the weekly data, there are a few that still talk to me and give me the weekly data. It looks like listings are still far outpacing sales, so I'm not sure where that fear of missing out is coming from. Which is basically what the chair of LSTAR just said, noting, I don't think we're going to see numbers jump up drastically right away. So, the national financial newspaper talks to one person in London, Ontario, no less, and says that FOMO is heating up, though that assertion can't be cross-checked with the data that's available, and is contradicted by the chair of the London Real Estate Board.
You and I, we need to present a united front.
And the other potential homebuyer with whom Bloomberg spoke was a 21-year-old recent graduate from Toronto about to start a job as an investment banking analyst. Now, I know where you think I'm going with this, and I'm definitely not. I'm not saying at all that a 21-year-old recent graduate can't buy a home in Toronto. I'm not saying that at all, but I'm not sure the extent to which a 21-year-old soon-to-be investment banking analyst is representative of the population at large, at least representative enough to indicate that FOMO is starting to pump up.
Then I fell asleep.
And finally, Bloomberg spoke to a realtor, incredibly unbiased source as we've seen forever, who said that when the market turns, it will turn quickly, and many will be saying, I wish I had, I wish I had. Which, as mentioned, we've heard that before.
It's not a lie, if you believe it.
So, we have Bloomberg speaking to one source in London, Ontario, another source in Toronto, a recent 21-year-old graduate, soon to be a banking investment analyst, and a realtor, and says that the market is starting to pump up.
It's not a lie.
At least when the Financial Post is trying to push a fear of missing out, trying to push FOMO, it takes the time to mention a poll. It doesn't take the time to read a poll, but at least it takes the time to mention one.
That, my friends, is called integrity.
But, as we saw, the numbers on the ground just aren't matching the narrative coming out of the national media. That 25, 30 basis point rate drops that we've seen in fixed rate mortgages since April don't really change affordability by all that much. Probably not enough to trigger a massive intrusion into the market. Whether or not 50 basis points is going to be enough for home buyers to buy that FOMO remains to be seen, but if they are, given that July's rate cut was highly anticipated and advertised all over the media throughout the month, then we should see a major uptick in sales in July's real estate data set to be released in a couple of days. Whether or not that will be the case remains to be seen, but we will obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.